Master your investments. Monitor and adjust a portfolio. Hello, esteemed future investment champions, and welcome to our video on how to monitor and adjust your investment portfolio over time. Don't forget to hit the like button if you find this video helpful, and show your support by subscribing to our channel. Having a well-managed investment portfolio is key to achieving your financial goals and reaching financial stability. In this video, we'll discuss the best practices for monitoring and adjusting your investment portfolio, empowering you to make informed decisions and achieve the best returns possible. Chapter 1. Setting your investment goals. First and foremost, it's essential to have a clear understanding of your investment goals. Think about both your short-term and long-term objectives, such as saving for retirement, buying a house, or funding your child's education. With your goals clearly defined, you can create a diversified portfolio that aligns with those targets. This means investing in a mix of assets such as stocks, bonds, real estate, and cash. Diversifying your portfolio will reduce your overall risk and increase your chances of achieving your goals. Chapter 2. The art of regular portfolio monitoring. Next, it's vital to regularly monitor your portfolio. Keep an eye on the performance of your investments, as well as any changes in the market or economic conditions. Review your portfolio on a consistent basis, such as once a month or once a quarter. This will allow you to identify any underperforming investments and make adjustments as necessary. With modern technology, tracking your portfolio performance and making changes as needed is easier than ever. Chapter 3. Adjustment strategies and rebalancing. When it comes to making adjustments, it's important to have a plan in place, understand when to buy and sell investments, and develop a strategy for rebalancing your portfolio. Rebalancing is the process of adjusting your portfolio to align with your investment goals and risk tolerance. This can involve selling some investments and buying others, or simply adjusting the allocation of your investments. For example, if the value of your stock investments has increased, you might want to sell some of those stocks and use the proceeds to buy more bonds or real estate. This will help maintain your desired asset allocation and reduce your risk. Chapter 4. Staying informed and adapting to changes. Another crucial aspect of monitoring and adjusting your portfolio is staying informed. Stay up to date with the latest news and trends in the market, and keep an eye on any changes in the companies or industries in which you're investing. This can be done by reading financial news and market analysis, as well as monitoring the performance of individual stocks, bonds, and other investments. Remember that your investment goals and risk tolerance may change over time. As your life evolves, it's important to review and adjust your portfolio accordingly. For example, as you get closer to retirement, it may be a good idea to shift your investments to less risky options. Similarly, if you're planning to buy a house in the near future, you may want to increase your allocation to cash and bonds, which are less volatile than stocks. Chapter 5. Seeking professional guidance. It's never too late to start monitoring and adjusting your portfolio. Whether you're just starting to invest or have been investing for years, it's never too late to take a more active role in managing your investments. By regularly monitoring and adjusting your portfolio, you can ensure that your investments are working as hard as possible to help you achieve your financial goals. In addition, it's always a good idea to seek professional guidance, especially if you're unfamiliar with the process or have a complex financial situation. A financial advisor or investment professional can help you create a portfolio that aligns with your investment goals and risk tolerance, and can also provide valuable guidance on monitoring and adjusting your portfolio over time. They can help you navigate the complexities of the tax code and regulations, as well as assist you with other financial planning needs. Chapter 6. Embracing change and learning from experience. As you continue on your investment journey, don't be afraid to learn from your experiences and adapt your strategies accordingly. Market conditions and investment opportunities will change over time, and having the ability to recognize these changes and adjust your portfolio is a valuable skill. Keep an open mind, be willing to learn from both successes and failures, and use that knowledge to continually improve your investment strategies. Conclusion. Becoming the master of your investment portfolio. In conclusion, monitoring and adjusting your investment portfolio is an essential part of achieving your financial goals. By having a clear understanding of your goals, regularly monitoring your portfolio, having a plan for adjusting your investments, staying informed, and seeking professional guidance, you can ensure that your portfolio is working as hard as possible to help you achieve your financial goals. Remember to hit the like button and subscribe to our channel for more helpful videos like this one. Your support means the world to us and helps us continue to provide valuable content to our viewers. Now go forth, conquer your investments, and become the master of your financial destiny. Thank you for watching.